The spring market's here in Connecticut. We got a new listing coming on in North Haven. It's a ranch on a cul-de-sac. I can't give away too much more information than that, but it'll be listed and on the market soon. This is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's March 3rd. We're going to talk a little bit about some foreclosures, a few other things. Before we jump into that, please like, subscribe, ring the notification bell. Comments are always welcome. Look forward to hearing what your thoughts are. Is there something I should be talking about that would be helpful to you? So let's talk about some key metrics in the market right now. 3,438 houses active on the market. It's down 18 from last week. 18 down, yeah, it's down, but it's nothing compared to what I've been talking about. If you've been watching my videos every week, 100, 200 down every week. So to see only 18, that's great. We got more listings coming on. It's not that we're not selling houses, it's just more listings coming on. Got 109 coming soon. So hopefully we'll see more and more of that coming in. And we'll start to see the number of houses available increase rather than decrease every week. We sold 2,449 in January, and it looks like it's going to be about 2,100 in February. The numbers are still firming up on that. Down a little bit. We had fewer days to sell, but we also have fewer houses in January for sale than we had, other way around. We had fewer houses in February for sale than we did in January, so you're going to expect to see fewer houses sold when you have fewer houses for sale. So February's down a little bit. We'll see how that plays out. 1.4 months of inventory. Very low, very strong seller's market right now. Talking about foreclosures. This is data from Black Knight. It's a company that does data analysis on real estate information down in Jacksonville, Florida. First thing I want to point out is I had a typo in the chart. They're talking about December 31st of 23. We're not time travelers. This was actually supposed to be January. That gray bar, the information is for January of 23. We haven't gotten to December yet. So the red circles, that's foreclosure starts. That's the paperwork's been filed. And you can see that in 18 and 19 it was around 50,000 per month across the U.S. We're at 33,000 now in January. And we dipped down in 2020 and 2021. It's a moratorium. We weren't doing a lot of foreclosures in most places. So that's why the numbers were down. And that's why we're seeing an increase. It's because you're looking at years where there was a moratorium where we weren't doing many foreclosures. The yellow is actual completions. That's where the house was actually taken by the bank. And you can see 10, 11, 12,000 in 19 and 18. That dropped down to 3,000 to 5,000 during the moratorium, and it's back up to 7,000. So we still haven't gotten back to that pre-moratorium rate yet. And then delinquencies in green, 3.9 in 18 and 3.4 now. So you can see all the numbers were still well below where we were in 2018, 2019. And just remember, 2018 and 2019 were low years. Let's look at this next chart. This is from 2005 to 2021. And that little bar that I added over on the right, that's 2022 numbers. Just to give you some context. So well over, almost 3.5 million in 2009 and 2010. We were at 234,000 foreclosure starts in 2022 for the entire U.S. So 3.5 million starts in 2009, 2010. 2022, 234. It's an order of magnitude less. So I just don't see a 2008 style foreclosure rush on the market where we have these huge issues. The starts just aren't. It's not bearing it out. So let's talk about a couple key dates. This next Friday, and I'll look at the report before I actually do the video. We've got the jobs report coming out. That's going to be big. Last month it was much stronger than expected. Month before that, same thing. We always want to see people get jobs. We don't want to see people lose jobs, but we want to see a weaker jobs report as far as mortgage rates are concerned. Because the Fed is looking at the strength of the economy, and one of the things they look at is jobs. The other one is inflation. So the consumer price index and the producer price index, those are the 14th and the 15th. The reports are coming out. The last month they were higher than what was expected. That means inflation was going up. We don't want that. We want inflation going down. So we'll look at those over the next couple of weeks and see what happens. And then the Fed will be getting together on the 21st and 22nd, and they'll be making a decision. I think they're going to do a half a point. It's at least a quarter of a point. It may be a half a point rate increase. And what we're seeing is that people are pricing that in. I'll talk about that in a minute. Another thing related to jobs, I just had lunch with a few friends, and they were talking about rumor layoffs in their industry. So layoffs are a wild card in that although we know they're coming, we don't know how many. So hopefully it's not a lot, but we do know that layoffs are coming. We're going to have to watch that. And if that employment picture gets really, really ugly, that's when the housing market can be at risk because people won't be able to pay for their houses. We'll see how that plays out as we go forward. The primary mortgage market survey creeped up a little bit. It's at 6.65 versus 6.5 last week. What we're seeing here is the market pricing in the expected Fed increase. Those reports I just told you about, the job report and the inflation reports that were higher than expected, they happened after the Fed's last meeting. So the Fed hasn't done anything yet for those reports. So people are pricing in the expectation that the Fed is going to raise the Fed funds rate, which will trickle down and impact the rest of the economy. Hopefully the inflation is lower, and hopefully the jobs report's in line, and we'll be in a better place, and the Fed won't have to hit the economy as hard as it could. Let's hope for the best there. That's what I have for today. Comments and questions are always welcome. Have a great weekend.